What are my lessons from 28 years of trading? Well, let's go through a few bullet points. Bearing in mind, I've been through pretty much, a few major market cycles now, from the dot-com bust, boom before that, bust, the great financial crisis and COVID. All right, many of you will have been through COVID, traded through that, but I've got a reasonable amount of experience now over the decades. So what are my lessons from everything that I've accumulated, not just personally, but from dealing with traders over the last 2 decades as well? One is there is no, wait for it, Holy Grail. I'm sorry to burst your bubble. There is no Grail. There's no Holy Grail in trading. There is no magic strategy that's going to, bring all your dreams come true, so to speak. There is a Holy Grail, but the Holy Grail is you, not your strategy. The way that you apply yourself, the way that you deal with the markets when the market's rejecting you, and also when the market's actually going with you as well. Do you go and get overconfidence and then muck up on the back of that? Or when the market's rejecting you, do you get overly hesitant and pessimistic? So all of that sort of stuff, that is the Holy Grail, how you deal with everything the market throws at you. Strategy, yes, we have to have an approach, a method, a strategy to trading, but it's how you apply the strategy which is the real secret sauce. Okay, another one that I found over the years with traders is patience. A massive lacking in patience. They don't want to hold on to trades. They want to bank the profits way too early, and that is a massive issue. I've seen it time and time again, and I still see it to this day, and it's perfectly natural. That's what people are naturally going to want to do. Instant gratification. Let's get this profit banked, sort of thing, and so they jump out of trades as soon as they go and see a reversal in price, or a piece of news comes out which goes against their trade. Then they'll justify and say, "Oh, that's it, I'm coming out." So they lack the patience. So a massive factor in trading underperformance is a lack of patience, and therefore banking profits too soon. What have I found personally? And again, one that I would like traders to improve on is this whole thing about being right. So I'm not bothered about being right. Of course, I still want to undertake all my analysis and of course try and put myself in the best position to have the next trade be a winning trade, of course. But at the same time, I accept the fact that I'm not going to be right all of the time. And the problem is that for a lot of traders, they obsess with win rate. And so if traders could obsess less about win rate, we have to have a win rate, but we don't need to be right 90% of the time. And if traders could obsess more about overall profitability, that would put them on a better path. So again, over the years, I've been that trader, of course, decades ago, about trying to be right as much as possible, but you realize as the years go by, it's not actually that important, and yet that's what the masses out there do. And I would say, look what the masses do. The masses lose money. So the masses are what, let's call it 70 to 80% of retail traders globally lose money. So, and yet what are they doing? Chasing holy grails, lacking patience, desire for high win rates. Shall I go on? Yeah, let's do that. Okay, so here's another one. And this is again from personal years ago, being a busy fool. So trading a lot, but actually when you break it all down, are you actually making any more money? And so you can very easily get caught up being a busy fool. And again, that's what a lot of people do. They think that being more active is going to yield them more results. Hence why so many traders around the world think that day trading is going to make them more money, because they and it's logical to think this way. They think, well, if I take 10 trades a day, then surely I'm going to be more profitable than a swing trader who takes, 2 or 3 trades a week. And on paper, that would make sense. It doesn't work out that way, because a trader who's taking 10 trades a day is more likely to make more mistakes. And if it's a professional trader doing 10 trades a day, they're probably risking less per trade to keep the volatility down on their account. So again, they're not directly going to outperform a good swing trader. So anyway, all of these points really do come to, well, okay, you can be a busy fool, obsess about being right, a lack of patience, searching holy grails. That's what the masses do. So you want to do the opposite of what the masses are doing, and stop searching for the holy grail. Just have an approach to the market, whatever that is, and stick with it, rather than jumping around all the time chasing the latest thing. What's the last theme? What have I got written down here? I actually made some notes for this. One thing that I do is have a clear plan of the big picture. So that's another lesson for my 28 years, and I've done this for decades, I must admit. I'll always have that clear plan of the big picture. Even when I was intraday trading, I'd always be looking at the context as the market, as I've always called it. So I'll actually call it context. Market context has always been important. And if a trade doesn't play out, then that's okay, because I've got a big picture plan. Then there's always a plan A and a plan B and probably a plan C. And so that's always worked out for me over the years. And I guess lastly, from a personal perspective, lessons from the last 28 years, if I put this down, and this is more from the recent 8 years, is it's a big responsibility being a regulated money manager. So I'm regulated here in the UK. There's very few educators in the UK who are, but there's one or two of us. But really, most trader coaches, educators, they're not regulated. They don't want to put their neck on the line and manage money, and you have to wonder why. So it's a big responsibility to manage money and to be able to officially call trades to my membership on what I'm doing. And I take that responsibility very, very seriously. So the lessons are that over the years, this is what I found. No holy grail. And yet people keep pumping out stuff on the internet, of course, and YouTube and the likes. I'm always being told of, oh, Charlie, have you heard of this this method or that method? And you think, there's only so many ways to buy the market. You buy breakouts, you buy pullbacks. And there's all these wonderful brand new sort of language techniques and whatever. But really, it's just about what suits you as a trader. So it's about finding what suits you. And so there is no holy grail. You do need to have a lot of patience. Don't be trying to grab those profits, because that is a massive problem globally. People having lacking of patience. Being right now in the euro dollar contract. The average short in retail is down at around about 113 or so at the moment. Now that is a classic example of trying to be right, because that's the average. So traders have been shorting retail en masse, have been shorting this entire move up, which is what happens, but they don't use stop losses. So even though the euro's sitting up at 117.5 up here, they don't use stops. They're trying to be right. And by not using stops, they can then hope that price is going to then come back down for them. So it's all of that stuff that goes on as well, and amongst everything else. So there you go. There's some of my thoughts there from my nearly 3 decades of trading experience. Is as usual, you got to work hard at it, take your time at it, and don't chase the holy grail. the usual stuff. Don't bank your profits too soon. All of the things. Think about what retail traders around the world do. Don't use stops. And do the opposite of them. And you might actually find that's not a bad trading plan. There you go. Have a great rest of your day. I'll be back in touch soon.